You're watching Business Incorporated live from Channels HQ. Coming up, South Africa's unemployment rate drops in the third quarter of 2022 to 32.9%. And China offers Rwanda a $7.1 million debt relief on a loan used to build the 6.36-kilometer Nasaka-Kabuga road. Plus, Ghanaian government set to raise 1.85 billion Ghana cedis in T-bills this week. Thank you for joining us on the program. I'm Ladi Williams. First off, let's kick off with sentiment in the market, starting with Africa. There we see in parts we track there, we see the NGX down marginally by 0.07%. At the time we took this number, South Africa there, 73.439 thousand points there, up 0.10%. That's what's happening in South Africa. Other markets we track, North Africa there, we see the EGX up 1.28%. Big move there at intraday. Be watching out to see how that closes at the end of trade. While Kenya there, which sits down 0.13%, closed yesterday. All right, let's drill down now into the NGX. Let's see what's happening at intraday now. Join us is Abdurrashid Momo, equity trader, TRW Stockbrokers. Join us to give us a taste of what's happening right there. Great to have you on the program.
Thank you very much, Ladi.
So what's the sentiment in the market right now? Last time I checked, it was down about 0.07%.
The overall market still looks bearish. You know, keep in mind that we've had a bull trend since the beginning of November. Let's say the second week of November, we're having a bull rally, and for every bull rally, there will always be a sign of correction. So where we are now is stocks are actually correcting, whether they are taking a rest to move for the next bull trend, or this might just be the end of the bull trend. If you noticed last time I said there was going to be a flash bull trend. This is what we've seen. What just happened is that the month of this period just virtually recovered most of what it lost last month. But the way the market is now, the market is within a very strong resistance level, about 47,000 plus. So I think the market is going to dictate whether it's going to be another bull run from here or the beginning of a market moving sideways.
I know you know how to check all those resistance and support levels.
Yes.
Where are we now?
Yeah. We are within a resistance level, but the market is down by minus 113.26 now, 0.24%. And most of the indexes are actually in red, except the industry, insurance, and Lotus. Most of the indexes are down.
Looking at the market,
but the losses are actually marginal, not much.
Okay, looking at the market from your end, what stocks are moving the market down at this time?
Okay, the way I will look at the market, the truth is that the big players are actually not involved in the market now. What we're actually seeing, hold on, let's say the ones actually moving the market down is the C&I Leasing, Cornerstone, Mayer, Transport, Hotel, and John Holt. So you can see what I'm saying. They are not really the major ones actually affecting the market. If you look at the overall gainers and losers, that's the top five, and the top five gainers and top five losers. They are more of the, I'll use the word penny stocks. But what we are seeing in terms of the big players are actually more of consolidation, and they are volume driven. When it comes to volume, we look at Jitco, Zenith, Stanbic, FCMB, and Access Corp. Those are the ones in charge in the top five in terms of volume for now.
All right.
So the major ones are not actually on. Yeah, we are seeing more of correction. Okay, let me give you an example. Let's look at Zenith. Zenith is down by, I think it opened 22 naira. It's actually trading about 22.69 now, 21.70. Sorry, so it's down by 30 kobo. You understand? So we just have to wait to see how everything works out. But the truth is, like, if I'm going to tell you how the market is playing, most of its levels are actually resistant levels. 22 naira for Zenith is a very strong level. GT is about 20 naira plus. It's now about 19 naira plus. He's trying to see how it will settle at 20 naira at the end of the day. So what just happened is that the bulls have taken a bold step for the past 3 weeks. That within a very strong resistant levels now, and we need to know whether the market is going to break those levels now, or in the future. But before December, I let's tell you that there's always a Santa Claus rally that comes on. And let's say this might just be the Santa Claus rally, but we don't know. But it is that if I'm supposed to talk about the market is medium term bullish, but the long term is still we're still seeing the bears. Is the current bull trend has not made much impact in the overall market, which we had for the whole year.
All right, I guess we'll be looking out for that Santa rally. But looking at where we are right now, where do you see at the close of the market today? Where do you see the market?
Well, you know how the market is. What I can say is, there are some major stocks in the market. When they sneeze, anything happens. Despite the fact that the market is down now, it reversal from any of the big names like Dangstem, Airtel, MTN, BOA. They actually dictate the market. But for now, I feel, for me, if you're looking at the chart, I think the market needs to rest. I mean, if you look at it, upon all the scenario that's been on ground, the market has been down. How many people make like 20% in 2 days, like MBL? So that bull strike was actually a very strong one. So I think for me, I'll suggest the market actually takes a breather for now.
Yeah, quite a quick breather, if I might add. But
yes.
Looking at what stocks, are you looking at, to give some good gains this week?
We've actually seen those gains. The one thing that even when the market was down, there was actually one particular stock I was looking at then, which was that Fidelity actually came to my radar chart. Despite the market, even when the banking sector was down, Fidelity was actually one stock I was looking at then. And I think for now, what it's doing is it too is taking a breather for now. This is a stock that I feel in the long term, with all what's happening, if it breaks resistance, we're looking about the 5 naira range at the end of the day.
All right.
For now, every other stock, well, let's wait and see. Because what I'll say that we know how much these companies are going to pay at the end of the year for their year end, and the rallies we've seen so far have actually surpassed what they're going to pay. And I'll just tell you one thing: there are always two players in the market at any point in time: the investors and the traders. So for the investors, even with the current price, they are still good entry points. The market is actually in quote on sales, so it's still a win-win situation in the long term.
I guess Black Friday sales continue in this market. Thank you so much.
Yeah, I think that actually happened last week. It was Black Friday sales. Because, you see, Ladi, there's one thing you need to know. No matter how bad the stock market is, right, no matter how bad anything does, it gets to a point where even when prices get, some share price, when they get to a particular price, there's bound to be a rebound. And that's what we saw throughout last week. It was not based on, even when we talked about the financials, I said it will take market time to actually assimilate all these things. And at the end of the day, the market just decided to, and when those rebounds actually started, we saw them. I can give you an example. Normally, when I analyze the market, I always analyze based on their various indexes. And there was one I actually gave was NGX banking. I said NGX banking was going to hit between 395 to 400 points. And that is where it is now. So the next thing is going to actually fight that level to see whether there's going to be a rebound. You know what we normally do is that we always wait for confirmation. If the market breaks that resistance, then a new bull rally starts. If not, then we are actually going to market might just take back, the bears might actually take back about 50% of what they've done for the past 2 weeks. It's more of correction stroke retracement. So I need to watch those lines. Those lines are actually, those figures, those are the things actually that guides us to know if we are going to be in a new bull rally,
right,
or consolidation.
Okay. Well, I know you watch your lines like a hawk. Thank you so much. Thank you so much, Mr. Abdul Rashid Momo, equity trader, TRW stockbroker, has given us an elaborate analysis of an intraday movement. Thank you so much.
Thank you very much. Cheers. Yep.
All right, now let's flip over to the Middle East. Let's see now. Sentiment in the Middle East is quite mixed at intraday. Right as you see behind me there, Abu Dhabi down 0.27%. So it's a bearish trend we're getting in the UAE. Flip over to other markets we track. There we see Qatar, Saudi on the other side in the green with Qatari index, they're the biggest mover, up 1.46%. All right, let's move on now. Let's see if we have what's happening in Europe. See, all eyes in Germany are still on the unfolding situation in China as Chinese security forces crack down versus protesters demonstrating against the country's zero-COVID strategy. Well, joining us now is Janelle Dumoulin from Berlin to tell us what's happening. So, Janelle, what has Germany's response been to the unrest in China?
Well, on this occasion, we can quote from an interview between DW and German President Frank-Walter Steinmeier. He stressed the importance of free expression and called on China to respect the right to freedom of demonstration. He said that he understood the protesters and why they wanted to voice their impatience and their grievance on the streets. Now, while Steinmeier's comments mostly focused on citizens' rights from the perspective of a Democrat, of a politician who believes in democracy, the acknowledgement of the unrest at the zero-COVID strategy is also coming up against wider German worries about the Chinese economy, Germany's biggest markets for its exports, of course. Now, the disruptions caused by COVID, the idea that the unrest fuels further unpredictability for German business and for global markets and for supply chains, as we saw yesterday. Even ahead of the protests, Germany's foreign ministry has been pushing to reduce corporate Germany's dependence on China, and that's after years of a softly approach meant to protect German investment there, in a way that arguably did not put human rights on the forefront. The interesting thing now to see would be how the foreign ministry proposal would be impacted by these demonstrations in China, given that there's always the potential for escalation in violence. But that is not a particularly easy question to answer at the moment.
I know the Germany, they had some key advice for the Chinese government. What were they?
Well, it was actually quite pragmatic advice, Germany's advice to the Chinese government, seeing as the key sticking point in all of this is the zero-COVID strategy, is to allow Western vaccines produced by Western pharma companies, BioNTech, Pfizer, and Moderna. These vaccines, of course, while still not allowed in China, underpinned the reopening strategies of Western economies and enabled them to lift most restrictions. Now, I'd like to quote from Stefan Hebestreit, that's the chief spokesperson for the government. He said the German government was taking note of the protests, but also that Chancellor Scholz brought up the use of Western vaccines in China in a recent visit to the country to meet President Xi Jinping and Premier Li Keqiang. Now, it's not clear whether this is something China will do, whether this is the kind of advice that China will take to help it out of its zero-COVID strategy at a time where it clearly needs to at least consider doing so. But that is something that we will have to watch later on to see if that advice has had any kind of impact at all.
Wait and see a moment there. All eyes on China right now. Thank you so much. That was Janelle Dumoulin there giving us the details from Berlin. All right, we're going to break now. When we come back, more stories from the African continent. Do stay with us. This is Business Incorporated. And now to our next conversation. We know the Ghanaian economy is no doubt experiencing some challenges right now. According to Bloomberg, year-to-date value of the cedi, the Ghana cedi, has depreciated by over 50%. It's now rated the worst performing currency. Inflation is at a 21-year high of 40.4%, while the benchmark policy rate is at a 19-year high of 27%. Debt to GDP ratio is at 82%, and these have forced the government to take drastic measures such as going to the IMF for debt relief. Joining us now is Miriam O'Day, analyst, financial derivatives company, joining us via Zoom. Great to have you on the program.
Thank you for having me.
So we saw that plan by the Ghanaian government to engage some kind of barter system with a gold swap for oil. Is that a silver bullet for the Ghanaian economy?
As you rightly said, the Ghanaian economy is facing a lot of challenges, such as the high debt relief, higher inflation levels, and higher interest rates. All of this can be attributed to the effect of the COVID-19 pandemic and the Russia-Ukraine war, which is increasing global inflation rates. Now, like Nigeria, Ghana does not process its raw oil, rather it imports refined petroleum products. So we can see that the increase in inflation rate would affect the Ghanaian economy since it relies heavily on imported refined products. This, in turn, would affect the foreign exchange reserve as cost of importation becomes more, and the government needs to spend more dollars in order to get the same amount of oil. We can see that the cedis in the Ghanaian market and in the forex market is currently depreciating, and as you said, has been named the world's worst currency. So the further depletion of the foreign exchange reserve would not favor the cedis and will continue to push value of cedis lower. So in the eyes of the Ghanaian government, we can see that they are facing a challenge, how to increase the importation of oil without further depleting the foreign exchange reserve. And the next option is to opt for a barter trade for gold for oil. So this would help to prevent the exchange rate from affecting the prices of oil of fuel, for example, in the consumer market, since the impact of inflation and higher interest rate is not accounted for when gold and oil is being exchanged. However, we need to note that there pose certain risks by doing this. For example, the strengthening of the naira. If of the dollar, US dollar. If the dollar continues to strengthen in the global market, we can expect that the purchasing power of other currencies will fall, making it more expensive for these countries to demand or to purchase gold in the forex market. In the global market, and this means that demand for gold will drop since the US dollar is the currency used in trading gold. So the policy is not really a silver bullet for the Ghanaian economy. The Ghanaian economy can try to diversify its exports, and so that this could serve as a means of receiving more foreign exchange rather than opting for a barter of trade of gold and oil.
All right, and we did get that news that the international bondholders for Ghanaian bonds, they were projecting some kind of shave off for their yields. But we'll keep tracking that market to see how it plays out for Ghana. Thank you so much. That was Miriam O'Day, analyst, financial derivatives company. Thank you so much.
Thank you for having me.
All right, we're talking about the Ghanaian economy there. So many challenges they're facing at this time. But meanwhile, still in Ghana, there we see the government says it will seek to raise 1.85 billion Ghana cedis to refinance the upcoming Treasury bill maturities of 1.61 billion cedis. Comes as it aims to place a moratorium on new financing in 2023, where non-concessional financing will only be considered for critical transformative projects. The move is expected to help slow down its borrowing. And South Africa's unemployment rate for the third quarter of 2022 fell to 32.9% from the previous 33.9% in the second quarter, according to Statistics South Africa. Statistician General Rusenga Maluleke spoke to Channel Television News on the latest quarterly labor force survey. Take a listen.
We have seen that we have gained in terms of employment. The number of those that are employed increased by 204,000 people to 15.8 million. And as we gained on the side of employment, we see that we had a decrease in terms of unemployment, having gone down by 269,000 people quarter on quarter. To go and from 8 million to go and sit at 7.7 million. As such, our unemployment rate has decreased by 1 percentage point. It's now sitting at 32.9%. Having said so, we can see that young people in general, 15 to 24 years, still remain vulnerable to labor markets, particularly those that are not in employment, education, and training. We are having about 3.5 million young people aged 15 to 24 years out of 10.2 million young people in general who are not in employment, education, or training. But it's not that alone. Also women. In terms of being vulnerable to labor markets. But generally, your black Africans and the colored population group are vulnerable to labor markets with an emphasis towards women. Now, on the employment gains, we see that there are industries particularly that have increased. Manufacturing has increased by about 123,000 jobs. Of course, there's been issues about electricity, challenges of power and energy particularly. But the fact is that on the side of food manufacturing, from the side of the GDP as well as petroleum, we have seen increases in manufacturing. So is trade. Trade actually recovered by about 88,000 jobs. Construction also recovered by 46,000 jobs. Construction has been depressed for quite some time, but it's demonstrating a show in terms of recovery. Finance had the largest loss in terms of jobs, and of course it's not finance alone. You have mining and agriculture did show losses in jobs.
That was Statistician General there, Rusenga Maluleke in South Africa. Well, China's offered Rwanda 50 million yuan or $7.1 million debt relief on a loan used to build the 6.36-kilometer Masaka-Kabuga Road under the Kigali Urban Road Upgrading Project. Statement issued by the Rwandan government says the move is part of China's decision to cancel the outstanding interest-free loan in accordance with the agreement on economic and technical cooperation between the two countries. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.